Yeah, so if you look at the import data, for example, weaker than expected. It suggests that domestic aggregate demand in China remains weak. And this, of course, puts then the question, what can the government do about this? We've already seen stimulus coming through in terms of lower interest rates. We expect that some of the reserve requirements will be cut. So I do think that that's another data point which suggests that this is quite likely to take place. And on the export side, the Chinese currency has been weak. We expect, as we go into 2015 as well, that all currencies will weaken against the US dollar, but that on a relative basis, the Chinese currency will hold up quite well. And it might show that maybe we need to see a little bit of further depreciation in that currency in order to regain some of that competitiveness. I don't think we're talking about currency wars here, but it might put a little bit of pressure on the currency as well. So net, I would suggest this data suggests that the Chinese economy is not out of the woods yet, that it probably justifies some further measures to boost domestic demand or support domestic demand and availability of credit for certain sectors. And it might have a bit of an impact on the currency as well. Well, massive is probably quite big. I mean, I think the imports is really related to the domestic side, and the export is partially a reflection also of what happens in the US and Europe. Remember that in Japan and Europe, aggregate demand remains quite weak. It's only in the US where we see things picking up, so that could be an explanation as well. So I don't think we should assume that the massive decline in imports will automatically translate into a decline in exports. But yeah, it's, as I said, it puts pressure on the policymakers to maybe do a little bit more than what they've done so far. Well, I think the reason for this is that this weak data just simply suggests that Japan is not out of the woods yet. We've already seen more reaction on the monetary side. We know that the elections are coming up, and therefore that it most likely is that Mr. Abe will continue his existing or have a new term in terms of setting policy in Japan, and that might give him the ability, this kind of regained confidence, and after the elections rebuilding his power base, it might give him the opportunity to implement some of these structural reforms, the third arrow he's been talking about in the past. And I think the prospects of that, which seems to be quite likely, is what keeps the Japanese market drifting higher.